All right, good evening, guys. Ken at Tortoise Capital. This is the small group coaching check-in for February 26, 2024. We had a number of guys that are on the road tonight, and they send in their regrets, and they'll catch up on the recordings. But they're all reporting good work in progress, just that they were traveling. So let's do a quick check-in to see how we're doing real briefly. Jeff, are you doing okay?
Yes, sir. Doing fine.
All good. I had a chance to read through the
Uh,
notes. I sent you some quick comments.
I saw those, appreciate it. And yeah, I'll dig into that.
Yeah. I mean, since you already got the back test on that already gets you started on thinking about the what to do when you have a good problem, like wow, I've got a abnormally good win and an exceptionally good win. Now what? Yeah.
There are definitely a few right-sided long tails on this one. So yeah, that'll be.
Yeah, that's what you want to make sure you get those right, because that's the one that you end up thinking about if you're not satisfied with how you rode the bull. You know, you want to have a plan for catastrophic success as well as catastrophic failure. George, how we doing tonight?
Good. I'm sorry I missed the call last week. I actually had food poisoning and I was traveling.
Oof.
So
Ooh.
You don't want to put those two things together.
well, I had the aisle seat on the plane, so I mitigate my risk.
Oh,
But actually it's kind of weird. I didn't do any trading last week, which is the first time I haven't been trading or working on something for many years. So it was kind of a very strange
yeah,
sort of big reset.
yeah, out of body experience.
Yeah, exactly.
Yeah. Juan Carlos, how are we doing?
Doing good. I wish I could code faster and be further along the lines.
Yeah,
But,
I always wish I
excited.
could I wish I could work as fast as I think, but not faster. You know, I just
That's a good one.
yeah,
Uh,
yeah, for me, I mean, I can see spreadsheets in my head when I have a new idea how I'm gonna sort it out. And then I hate actually making it. It's like, now I got to go in and turn it into
Yeah.
reality. But I have to be able to see the whole thing in my head first, and then I can get moving on it. And then I give it to my son to code, and he
Yeah.
usually finds a more elegant way to do things. So
Yeah, it could do something like that, but no.
yeah, for sure. Well, let's go ahead and get started. I got to be out of here at 8 so I can finish up the daily reports and all that stuff too. I took the dogs for a walk earlier today. They were at home when we had all day. They were locked up because we had some people working on the house, repouring some concrete in the driveway. They didn't seal it, and then right after they finished that project, we had a bunch of rain and standing water, and it made because it wasn't sealed, it ended up cracking in one section. So to come in and redo the whole thing in that section. So they came in and poured another 10 by 10 pad. But you know, so the doggies were all locked up today, and they needed to get a few steps in. So anyway, I got it hard out at 8. So having said that, let's go ahead and jump into it. Who's ready?
I'm ready.
George? Okay. George, why don't you go ahead first?
Okay. So kind of funny, I missed last week's meeting because I actually had the best week ever, 11R. So that was exciting. And for today's check-in, I think what I need to work on is re-entry and stop and reverse. I always felt like I don't know when I should do it and when I shouldn't do it. I felt like whenever I re-enter, it always usually fails. And same with stop and reverse, but if I skip it, then it goes. And other than that, just back to trading the 30-minute charts. Today was a great day, lots of opportunity. Yeah, that's all I have.
Here's what I'd suggest trying. Try the, write up the rules for the reentry and the stop and reverse, and trade those at 1/3 of your normal position size. Because I feel like you're getting into a rhythm now on the regular entry. That feels correct. And that's becoming routine. And then one of the ways that you make that routine is that when you try on the new skill, adding one skill, which is either the reentry or stop and reverse, and you want to play that as a prototype, one of the ways to keep that separate in your head is to deliberately trade it at a smaller size, so it feels like a prototype. Now, whether that's 1 share or 1/3 of your current position size, that way you can, it definitely feels speculative, which reinforces the professionalism on the first trade and keeps it separate in your mind. And then that way you also have lowered the risk considerably to learn it when you're trading live. So now I would also suggest go through that with, you want to do that with skin in the game, whether that is paper trading in a practice account or putting it on your the charts that you show in the evenings, or trading 1 share live or 1/3 of position size when you're at production level, whatever, so that you can start studying that separately. And then you can say, instead of, well, I feel like I'm always on the wrong side of that trade, let's just see what the stats show. You know what I mean? And that way we get out of the, well, I can only remember the ones that were memorable. And then those are the ones that stick. So we want to bring that to the same level of rigor that you're doing with the stats that you're showing here. So that would be my suggestion on that. And then I think the first one you got to decide to do or not is stop and reverse, or waiting for the reentry, because typically the reentry is going to occur after a stop and reverse. So take a look at the rules that you have for cutting it short and for making your exit. And then we got to decide, is that actually a signal to go short? In other words, if I wasn't long and hadn't taken this capital preservation stop, if I was just looking at that chart fresh, does the reversal trade meet the criteria for an entry?
Right.
And maybe it doesn't. Maybe it does. If on the simplest kind of a system, which is like a PSAR stop and reverse, which is always in the market, the exit of one position is the entry of the other position. So that's just a clear directional switch, but it's always in. But
Right.
sometimes if you've got a wider stop and you're preserving a win, you might actually end up getting out sooner than you would necessarily get short on the reversal. So take a close look at your exit rules and your performance there. And then, go back and take a look at your winning trades and take a look at some of where the exits are. Is there a logical reversal signal? Like maybe it takes, a formal collapsing dragon, Because maybe you get out on the southern skin of the dragon or the spine of the dragon or something, but you want to wait for the PSAR to get violated. Okay, then there could be an interval in between your exit of one and then the entry of the reversal trade. So
Right.
that I think is the first decision.
Okay.
The second decision is when to conduct a reentry on a resumption of the original trade. So that's usually going to happen after you've made a decision to stop and reverse or not. Usually you've decided not to stop and reverse. You're just kind of stalking it, and then the thing slows down and then it reverses back in your favor, and you have something like an orderly entry. What you want on that one is that's truly a kata 2. And I think that's the one that's easier to talk yourself into, because you get a winning trade. I cashed it. Now I'm stalking the reversal. It reversed. I mean, it has reversed. So I get out. Now I'm just stalking a resumption of the original trade. It's starting. It works. It works. Price goes across the dragon. Boom. I'm back in.
Right.
And then not later than the emerging dragon. That's normally the decision you got to make. The price has moved back into the pocket. And in my personal opinion, as long as you are entering somewhere in that region between the north end of the dragon and the collapsing dragon or the emerging dragon, there's a window. If I can just get the middle of that, I'm usually happy because it's not that big a deal. It doesn't improve it much one way or the other. And I just feel like, hey, I'm getting in before the breakout occurs. Then when the breakout occurs, because this is the second leg and it may not be as big, I can get my stop to no lose quickly. So I like to enter in the pocket. It feels like I'm one step ahead of the herd. And then if the second leg turns out to be as big as the first leg, I'm really happy. If the second leg turns out to be bigger than the first leg, here we go. We're into it now. That feeling happens when the first leg is good. There's a quick reversal. You get out, and then it reverses right back in your favor right away. You get it into the pocket, and then the thing goes. You may have really tapped into something large on that one, particularly if it's a really narrowly focused company like one of the metals, like Alcoa or Cliff, which may have been 5 days down and it was a horrible sell-off and it reversed. And now you're on the first day of that recovery. You get a first burst leg one, starts to stall, we cash it. Because we're mindful that the previous trend was down. Oh, here we got a good leg one and now we're in. And then it just pauses and then resumes. And so I can get right back in. And that can often be that first day after a sell-off can really be a couple nice legs in a row on day one of recovery. So that would be as you're looking for candidates to exercise the reentry on, I would spend some time thinking about what it is you want to see about the first trade that makes you want to reenter. Like if it was just a grinding move and it was below average win and there was nothing special, maybe I'm not in a hurry to reenter. But if that first leg was sharp and strong, had a clear exit for me to make a win, especially if it's an above average win, and then the reversal trade didn't work at all, and this thing is right back into the pocket and going, that's the one I want. Because you can see the guys are coming in. So that would be my advice as you think about those two strategies. First, think your way through and rehearse the stop and reverse with respect to the profit preservation. And then the second one would be, are there any special criteria for the reentry so that you're not just taking every possible reentry just to practice it? be thoughtful about it now, about what it is that you want to see. That will lead you to stalking the reentry. And you want to have that same kind of deliberate process that you do on the reentry as you did on the first entry. So think your way ahead of it before you start indiscriminately pulling the trigger. And that way, that will strengthen your visualization and your clear. And it wouldn't hurt to draw a picture of it with a pencil on a paper. I prefer 5x8 cards. In fact, I know I prefer that because the guy that I'm mentoring in the office for the Army he used to work for me way back in the day when he was a captain and I was a major. That's 25 years ago. So he's now a retired full colonel, and he just started his doctoral program at the university where I teach research methods. But he's also working for the Army too in my office. And so I've been mentoring him on research methods, and I overheard him talking today. He says, "Hey, I got another one of Doc Long's 5x8 cards with the pencil sketches. I need to start making a collection of these." So I know that I'm inside his head. But yeah, it's the sketches give you a way to manifest that vision, what it is I'm specifically looking for. And then you can just literally hold that card up in front of your face and look at the screen. Am I seeing what I said I wanted to see? And that'll help with the, play calling. That's why all the football coaches have those great big cards on the sideline. I would love to see one of those cards to see how they design their little menu for play calling and situation. I think that'd be fun. I don't know if anybody has those out in the somewhere on the interweb, but I think that would be fun. Okay, that sounds like a plan. Good. Think your way through that, and then if there's any questions on that, just give me a shout during the week, and we'll fight our way through it. Okay.
Okay.
Yeah, but at full speed ahead. This is looking good. All right, fellas, who's up? Well, Carlos, why don't you go ahead, unmutify yourself there.
There you go. So this week I concentrated on collecting all the formulas and for market classification and for addressing the targets, the range stat and the standard deviation, ATR, RSI, all those things. I made a list of what I want, and I created the formulas. I tested them in TradeStation. I followed them, and I found a couple things that really got me excited about that I'm going to show in a few minutes. I applied some of the of what I've learned to my existing strategy, and it made it profitable, which it proves to me that this works. And that for me is huge because it gives me hope and changes my beliefs on what needs to happen in order to address a profit. And that's that. Next week, I intend to finish that coding. Let's see if I can make it and start concentrating on the exits. I want to do analyze how to take exits, where it is. I've been following your exits for a while, dinner for two, the sniper, the managers, but I've never really paid attention to the details of it. So I want to concentrate on that before on the entry, because the entry is there's so many ways to get in, but very few to get out with a profit. So that's kind of, I'm doing everything in reverse this time. So that's that. That's where I'm at. And let me share my screen. Oh, here it is. So this is what this is one thing that I found that I loved it. So with the sniper strategy, I did the NDX, the 10, the 30, and the 150. So analyzing the catfish, I went and found the 150, the 130 down on the 10%. And then the volatility, I found it under -1 standard deviation. So it was right here. and immediately it exploded and
Yeah,
that
that's
could
when
be
the catfish hits the hook. He's just sitting down there in the mud, fat, dumb, and happy. And when everything's quiet, he just sees a delicious little treat. And he just can't help himself. He strikes.
So I love to see this, right? That I was able I was able to see it visually and where it is, and that's amazing. Like, and I did for a couple of others of the other.
Yeah. Hey, on that same chart, while you're there, I want you to go east till, okay, you see, yeah, stop. Now on your second indicator from the top.
So this one,
Yeah, no. I guess no, third one. Go down.
the
Go down
volatility.
one more. Go down one more.
This is the 10.
Yeah. Now take a look at the so that's the second, that starts the second wave of that move. Now leave that vertical white bar where it is. Now with your eyes, travel back to the first breakout of the catfish.
Uh-huh.
Right. Now that one also had everything was oversold. And then suddenly there was the surprise move and it ran all the way up to looks like 996.
Mm-hmm.
And then it has that nice easy cascade slide downward, goes below the green and the red line of the, I guess that's like a river or I'm not sure what that is.
That's a 200 with
200,
the
yeah.
plus
And then-
minus
yeah.
2.
Yeah. So it goes below that. Now it took 3 times as long for that to decay as it did on the initial burst up. So the initial burst up goes from 580
Mm-hmm.
to 990.
Yeah.
That's almost 100% move. See that? On the
Yeah.
first burst of the catfish. And then there's 3 legs down. There's a decay, pause, decay, pause, decay, pause, and now it ends up at the same low price level below that 200 as the first time the catfish struck. And then now it takes 3 legs for the rest of the chart to get back to the same level of the original strike of the catfish, back up to like $10.
Mm-hmm.
So one of those functions is the memory of the last explosion of the catfish is still there. So the traders are a little more wary and they're aware of the peak of the catfish as sort of like an upper limit. And now they want to get partial bites of that. So the first time it just explodes and goes to its natural limit in one shot. And then it slowly fights its way back down. And then as it comes out of the mud the second time, there's another 3 legs and it takes 3 times as long to make that move. So the memory of the first burst is there. So that's part of the dynamics of short-term memory is that the reason the catfish works the first time is because 100% of those people are surprised by the move. The guys that are triggering off of the 10 period are really surprised that it keeps going beyond their expectations. They just thought it was going to go back to the 200 and it blew right through there. So that's an example in my interpretation of all 3 demographics who are interested in that trade, all being surprised that the other 2 demographics are buying it as well. They're used to just having these little bounces and done. And now suddenly, I think because all 3 demographics were simultaneously oversold and the volatility was exceptionally quiet, suddenly it starts going, it gets back to the 200 period fast, and they're all startled. And so then they all just start scrambling to buy on this amazing breakout. And then it runs all the way up to 10. And now there's nobody left to buy.
Hmm.
So they're all looking at, holy shit, that was an 80% gain. And now they want to hold on to it, but they slowly get eased out of that position as it fights its way back down to its starting point. That is what you're seeing there, is that the short-term guys get out of that thing fast because they're only triggered by 10 days. And they just say, well, shit, this thing went from 6 to 10 in a hurry, and now there's nobody left to buy, and it starts to decay. And they start saying, well, you haven't done anything for me lately. They start preserving their wins right away. So that has a little bit of selling. Now nobody comes in and buys, and then it starts to fail again, getting close to the 200. And now the midterm guys, the 30 period look back guys, they start bailing because they want to keep at least half of the gains. So they sell. And now finally, in the last leg that takes it down back below the 200, in my opinion, are the long-term buy and holders who said, oh crap, this thing, it never really followed through. So we're going to get out. So all three of them get surprised into the position at about the same time, but then they peel off from the win according to their timing model. So you get an explosion up and then a slow decay. And now it's right back now where the vertical white line is. It's all back to oversold on all three conditions, but the volatility
It's huge.
is no longer abnormally quiet because it remembers that previous burst of buying and then the slow sell-off. That makes the 5-day volatility stats no longer abnormally quiet. So you have all three trade locations are oversold once more, but the volatility is not abnormal. So it's just business as usual. So now the next move up, yeah, there's buying pressure from oversold conditions, but they're a little more careful now because it wasn't, they're no longer surprised by the fact that this thing can go. So that makes them actually a little more tentative. So the second wave of this thing, which is from the vertical white line,
Mhm.
it now takes 3 times as long for it to crawl its way back up to 10 because now they're not going to be as surprised. So in conclusion, my argument for this style of trading is that when you get the combination of 3 oversold conditions, so that's location, and extreme volatility, in this case, absence of volatility, the extreme quiet, the combination of those 2 factors, location and volatility, is what creates the potential for the explosive move. Now, it's not impossible for that thing to recover and then start working. It's just that it's no longer the catfish. It's more like the Godzilla because you have extreme oversold, and now this thing, there are times in there where the volatility is large, and now it's a Godzilla. It's in play, and you can buy new breakouts, but it's a slightly different mentality between the catfish and Godzilla. So I think there's what I wanted you to see was that the second wave of trading on that thing was the slow decay, and then after it hit that same support level, back down around 5 and some change, yeah, right there, that's sort of the place where everybody who was gonna sell sold because it's already back to where its long-term support was. And now you start seeing careful breakouts. You could see 1, 2, 3 entries in there. You could see the crossing of the 200 is even a possibility there. And that was enough. The buying pressure of the catfish move was enough to make the slope of the 200 go from down to flat. So on a much longer term scale, the psychology of this thing it's back in play. Because when that slope of the 200 was down, everybody was in despair. All they could think of was this thing was going to go to zero until it found some level at which buyers could be triggered, and that's what establishes the bottom. So the bottoming process is it's never a V bottom on this longer term look like this. It is a process, and what you're seeing right there is a two-step process: the burst up and decay, and then the second, more careful climb out of the basement once again. So they're aware that the bottom is in, and now they're starting to be a little more professional about their moves. But that's where the idea of support and resistance, the absolute support and resistance of price, comes in. Says that's a price that will get their attention. The first time it was a catfish surprise, explosive move. And then the explosive move tells you something about what that absolute upper limit of the channel is. Now go back to the peak of the catfish move.
Here?
Yeah, right there. Now go up to the maximum value. Look where we had the resistance was still in place months later, in end of January, start of February. It had crawled up a second time to that same price level, and the resistance on the first leg from the catfish move was still in play. That got everybody's attention. Says, hey, we're at the price level where the last run definitively stopped, and where all of the selling pressure came in. And look, wherever I got my entry on this second leg up, I have a real belief that if it doesn't break through 10, it could just as easily go back to 6 like it did last time. And that's why you see sharper selling the second time it got to 10. That was about 5 days in a row of just harsh selling.
Yeah.
That almost looks like 5-day down. You know what that looks like right there? 551W.
Oh yeah.
That is a 551W, which I talked about in yesterday's Foundations Q&A. So leave that little arrow, go to your left about 5 days. Yeah, right there, stop. So somewhere in there, you could look back, and what you would see is that today I have a white candle. It closed higher than the open. So it's a white candle. So that's 1 day of positive intraday move, because they held it overnight at a price higher than the entry. Now, if I go back 5 weeks or 25 days, I'll see probably somewhere around where price was somewhere around the 200 period moving average or something. Yeah, right about there. So 5 weeks ago, if I see that price, and now today where the 551W hits, my close today is higher than it was 5 weeks ago. So there's a longer term positive trend. But if I look back 5 days, it's sold off from where it was 5 days ago. So I have essentially a buy on dip opportunity. It's stronger than it was 5 weeks ago. That's good longer term, but it's lower than it was 5 days ago. So there is some sell off. But today was a white candle that maybe that's the first day of resumption of the previous trend. So I can now buy tomorrow if it breaks out above today's entry. That's the essence of the 551W. So what I want you to do is to listen carefully to the presentation from yesterday's Foundations Q&A. I was reviewing all of the mechanical swing trades. I'm going to hang that in the small group course as well. But what that lets you do is now start looking at this, in this case, MSOS. Why am I interested in MSOS? Because it's been the number 1 or 2 short-term trade quality ETF for about the last 6 months. It and Tesla. And it gets to be a high quality short-term trading target because it has a lot of volume. it has a large average range percentage, meaning that compared to its price, it has large candles every day. Compared to all of the other symbols that are out there, it trades a larger percentage of its price than almost anything else that I trade. And the frog quality number is large, meaning that it doesn't just have a large average range percentage, but it consistently trades a large percentage of its price. That's how you get a large frog quality number. So the way you find trading value is average range percentage multiplied by the frog quality number. That gives you large average range plus consistently large. So the two that are consistently at the top of this is marijuana, MSOS, and Tesla.
Yeah.
The other ones that are typically up in there are PBW, Clean Energy, Devon Energy for energy, Cliff Natural Resources for steel. Intel has been in there. That doesn't mean that they're running away with long, strong swing trade moves. What it means is that they are reliable, large movers every day. Direction unknown.
Cool.
Right? So what I would say on this one then is this gives you an idea for chain trading. It starts off as a nothing. Up until September last year, there was nothing interesting about this. But boom, you get a catfish move and it wakes everybody up. Now, one of the reasons it woke everybody up is if you can scale out of that thing and go take a look at where marijuana was before, like, can you go back like 3 years, expand the size of that chart? Yeah. And expand it even further. This thing used to trade up around 25 or 30 and 40. This thing has sold off from 40 to 5. When that thing was up there, actually, I think the peak was up around 60. When it was up around 60 was when Biden talked about legalizing marijuana. And all of the people, well, here's, I think, the real story. They made a decision to legalize marijuana back in October of 20 at the start of your chart. This thing was trading around $15. And then I think they decided among the congressional staffers, you know what, the time is right to legalize marijuana because that's going to help us in the midterm elections in 2022. And since we know we're going to do that, let's wait until we announce it, until all of us have quietly taken positions in the marijuana companies. Then that thing, the news is released, it runs to 60. Then there is a long, slow decay. And now about 300 or 400 days later, 18 months later, this thing is a disaster. It's gone from 60 to 6. It's lost 90% of its value. And now all of a sudden, in September 23, which is the very bottom, now zoom in on the catfish out right there. Right there, that is what neglect looks like. That's not hate. They don't hate marijuana. The last little bit of hate was that last bit of volume right there. That's when hate kicked in and they said everybody that was a true believer in it just bailed on it and said, the hell with this thing. And then there followed 6 to 9 months of absolute neglect. Well, you know what 6 to 9 months looks like? 150-day look-back period. And now that thing is oversold and oversold and oversold. And all the volume and volatility disappears until boom, they're all surprised and it runs from 6 to 10. Now it's back in play. It's back in play. Guess what? There will probably be some kind of press release about expanding coverage. I don't know, whatever, fucking marijuana giveaway, free brownies with every ounce you buy or some shit. I don't know. So,
So,
so my point is that the catfish, which in some ways is also a Godzilla, a quiet baby Godzilla, has almost the same features, announces the thing is back in play. And then now that it's in play from that moment forward, you will start to see a series of other setups in what we call chain trading. You'll see 5DDs, you'll see 1, 2, 3 entries, you could see kata twos in there, all that kind of stuff. So once that thing is in play and you have a handful of standard plays at your disposal, you now get the benefit of being like a golfer who can use a driver, fairway woods, long irons, short irons, wedges, and putting. And now you have a repertoire of tools, of patterns that you start adding one at a time to your repertoire. And it's nice to have one that allows you to trade those explosions with discipline and preparation, because you can respond. Because now once you know the thing is in play, you know that you're going to have a long-term engagement with it. And as long as MSOS is near the top of that daily trading value list, it becomes a priority target, starting with the intraday and then sometimes the swing. So I just wanted to draw your attention to some other things that I'm seeing on your indicator list.
cool. So the last thing I wanted to show is just my thing that I'm very excited about is that I created these charts so I can code them later, which is a 1-minute chart with the 15-minute PSAR and the frog and the 5-day up and down and whatever. So I created this strategy that pretty much the frog in most of the entries.
Yeah.
And it was really profitable. I've shown you a couple times this, and then this was the first few trades or the first time, and then it crashed, and now I'm trading very small positions. But I came in and put what we've been working on market classification. So this is how it looks like working with the 9 bins. So going into bear markets only. And it made the strategy, it will come on, break even. So it still have the losses, but it has not been as bad as before.
Yep.
So it filtered losses and it kept the same highs, which I thought it was interesting. And then I added using the NDX to find where it has been oversold. And then it filtered even more of the losses, and it created profitable environment. So even with a little thing up, and if I expand it for more days, it's even more.
Yeah. If you go back one chart, and this is going to get to the to the guidance and the ideas I was sharing with Jeff, and that is that
it will,
when you have abnormally large wins, the period of time right after that big give back is what we want to be avoiding. So one of the things that happens is that when you're just in normal wins and losses, the market, nobody's bruised, nobody has lost their mind. But after you had a series, he's got on that one 2 really strong periods of gains that pushed the equity up around 1,000 or 1,100. That second half was harder because there was more give back. You can already start to see the bear side starting to come back. So after a period of abnormal gains, you want to be more mindful of giving it time to heal or time to recover. And so some of those filters that you added, Juan Carlos, allow you to avoid that give back from 1100 all the way back down to 200. So that's why I was saying, Jeff, when you're studying the trade characteristics, it's good to know when you just completed an abnormal period of wins, because the buyers are no longer as motivated as they were, because they realize their great good fortune, and so they're not there as aggressive yet. But the sellers are, because they got to get back. They are hungry to get back the money they lost. So that's why you often see in the volatiles, the sell-offs are as harsh as the wins. So we want to. I don't like to trade them when they're in the normal volatility. I like to see it back down there. After the big sell-off, there's a couple, 2 or 3 bumps where it didn't lose any more. That tells you the sellers are back to complacency. So this thing is back to a balance once more. And now the buyers come in for their short-term spikes. So anyway, yeah, those things that kind of analysis will help you as you find incremental ways to work on that previous string of trades. That's where you start coming up with those additional rules that will give you a chance to hold on to your wins longer. So you're not losing your mind and adding more positions after huge wins. That's when most people blow up, is that they say, oh, all I can do is win. So let me get really, really large. And then they end up suffering. Okay.
Good, thank you.
Sounds good. All right, Jeff, what you got for us? Unmute.
Okay, can y'all see that? Okay, I'll go fast. Looks like getting close to 8. Let's see, I'm just going to skip over a bunch of stuff. I did finish the draft. I sent it to you, Ken. Thanks for the feedback on that. And Quant Connect has AI that's been trained on their specific, they've trained it on their documentation and their model. So I got that working. It was broken for me for most of the week. And so I actually worked with those guys and they had a workaround, which is goofy, but it worked. And I worked on getting Everett up to speed. In addition to looking at your stuff, Ken, he is taking a Python financial analysis with Python class. And so that's good. It's going to, help him get up to speed. He's had Python. He's in his second Python class, but this is the financial analysis and the way it's done is pretty much more advanced than what he's had. So I think he's struggling a little bit, but he's excited about it.
Where's he taking that course?
That course I found it and it's on Udemy.
Yep, I know which one you mean. Yep.
Yeah, so it looks really good. I may even consider it, but I'm kind of overloading with new things I'm learning between my day job and this.
Sure.
There's 2 or 3
Hey,
things.
so what is the AI from Quant Connect?
It's called
for
Mia,
you?
so I'm assuming it's the same engine that Microsoft has.
Yeah.
The difference is they have run it, and I know they were offering this where you can run your own documentation and stuff, train it on your own code. They've apparently done that. So haven't had a chance to really, and I've done a little bit of stuff with oh, I just went blank. The AI that's real common, ChatGPT-4.
ChatGPT, yeah.
Yeah, I was talking to the guys about that. It was kind of wild how much it knew about even Quant Connect, which is kind of obscure. But this is supposed to be even better, so we'll see.
So does it do like parameter optimization on your code?
The AI, so there is parameter optimization built into the platform. I'm not sure how far, and with the Python piece, there is actually AI modules, right, that you can plug in that are already Python modules.
Yeah.
This is, I haven't seen how much this AI can do specifically. It seems like she's geared, I say she because it's Mia,
Yeah.
but it's geared more towards helping troubleshoot your code itself and add features to your code. So I'm not sure.
Yeah, if I remember, Mike Bryant with the software you're using for position size market system analyzer,
Yes, sir.
that has a genetic algorithm module in it that'll do some pretty interesting. And this is like 10 years ago. He had already was looking at genetic algorithms to create systems out of your preferred indicators. So it would do some genetic algorithmic testing to optimize your parameters. So with all your copious free time, that might be something to look at as well, because that dude is a rocket scientist for real, and
Yeah.
that thing was massively interesting.
Okay, very cool. I saw that he's talking about doing that and introducing genetic variability or something in his
So what it does is instead of you having to think up the combinations and the steps, it will just use the law of large numbers and randomly introduce a few mutations to see how they work, and it really quickly investigates the solution space for combinations of indicators that you wouldn't have necessarily thought of, but it competes to win as opposed to data mining. It actually does like survival of the fittest testing in a robust way. It's one of the ways to avoid curve fitting through random mutations of your systems, and it's an interesting way to explore solutions.
Good. I'll take a look at that. As far as what I'm gonna do this week, I'm not gonna read through it all. I'm gonna continue to work with Everett on your book club, and he's at least watched some of those, and so he's back in this week, 3 days this week, so I'll have him close.
Now, if he would take note of his specific questions of that in a Word file as he goes through, I would be interested in that to sort of get a sense of, hey, here is a excellent student new to our material, and these are the questions that came out for a guy like that now allows me to put together like an introduction to the introduction,
right,
for traders that are new to our materials, and that would be very helpful to see our stuff through a genuinely new lens like that. That would be doing me a service if you could do that.
Okay, I will
And
let him
then he will get a specific Q&A answer session just for him.
There you go. Awesome. Let's see. Just real quickly, I hate to ask for help, and that's kind of one of my, I don't want to look stupid. It was in my SWOT analysis. I'm looking at this and I know I can figure out how to do it, but it seems like this is something pretty common. I've never done that in Excel. Is that if you guys have that?
If you go, do you have access? You have access to Campfire?
Yes, sir.
Take a look. Look for tradelog.xls. There's there's a little trade log that'll produce all those performance charts that we use.
Okay.
I
got it.
And also I would send a note to Luke Crockford. He does one where he has some additional control charts for the rolling 30, 60, and 90 period, or 30, 60, 90 trade SQN and expectancy, which does a nice job of tracking large volume trading systems.
Okay. Yeah, I need to reach out to him anyway, kind of make an introduction since he's on my list of later systems.
Yeah, plus he's doing I think he's doing work on 25-second charts or tick charts for automated index trading of the DAX and the Aussie dollar, where he's rolling up all the trades of the day into a single net daily trade.
Right.
and then managing the bucket, the net bucket of what's the daily catch. So he's measuring the size and stats of the daily catch as opposed to each individual cast. He's doing industrial fishing in an
Yeah,
infinite
I
sea.
like that concept a lot, especially
Yeah.
when I get multiple systems running. It would be nice to
Yeah.
maybe roll them that way.
Yeah.
And then I had a question about MySQN versus the PRX crypto.
Yeah.
I'm kind of reversed from their SQN numbers, but I will let you go and I'll bring that up next week. I don't have to have an answer for it right now.
Yeah, I'm looking at it real quick here.
Theirs is mine looks like this and theirs looks like this. And the punchline is, if I'm seeing this right, the expectancy mean R gain is 0.24 on theirs and on mine. The difference is my SQN is 3.4 and my NSQN is low, and they're
Yeah.
reversed. And
Yeah,
this
so
is
what's your number of trades is total what's
mine's
that?
679.
679. So
And theirs was pretty high. Theirs was 2140. So we're both
NSQ, you may have that revert. NSQN
that seemed backwards.
is the high. Wait a minute. SQN I think is normalized for 100. Yeah, and so NSQN should be larger because you're multiplying by the square root of n.
Okay.
Right. So when you take 679, the square root of that is somewhere north of 27. It's going to be 27 times the expectancy. Or 27 times the average wind divided by standard deviation. Whereas the NSQN normalized for 100 would simply be 10 times that. So your NSQ, I'm sorry, I said it backwards. SQN is normalized for 100. NSQN is using the N of your actual trait. So that should be about 2.5 times larger than your SQN. So my spider sense is that you've got those reversed.
I will look into that too.
Yeah.
Cool.
What that does is you should have a higher degree of confidence if your N is larger. Hey, I got 700 trades and it's still performing like this thing that's like going to work in a factory. And that thing's going to be there and stay robust. Whereas the SQN off 100 off a sample of 100, that might have just been one good week at work. So I'm not entitled to have as much confidence on that. So I think you'll find that it's in the multiplication of that.
Okay, I'll dig into the formula. Thank you.
Yeah. All right, fellas. Sounds good. We're good work here. When you're satisfied with that with your system definition of PRX, and I think you're real close on that too, you might consider sharing that as a close hold sample for these guys as an example of what to do. And then I would put all of the calculations I asked to look at, make that a separate section, a research section, refined performance stats section to give information about what the test period looks like. And then a year from now, when you run the numbers of it trading forward, you can go back and compare that over a longer time series and see if the performance. So you start looking at the seasonality of performance over time. And that's where Luke's rolling 30, 60, and 90 trade template does a good job of defining control limits for the normal oscillation of a system under control. And that's helped him to not abandon ship after a 30 period of underperformance. That turned out just to be, well, that just happens. The 90 period seems, and his frequency was long enough to represent a quarter of trading. It's like 3 months worth of trading. And you don't want it to let it go longer than that before you take action, but it allows you to stay in a little bit longer. when the system's normally working. Okay. All right, good work, fellas. You guys are making me feel better about starting this program. I'm always, I'm comfortable when I'm talking about my stuff, but when you're a coach and you're working with other guys doing the work, it's hard to not get, no, do it this way. But you guys are really, I think, you've got the reins of your horses in your hands and you're doing the work, and it feels, that's where the value is being created. So you're kind of confirming to me that this is an appropriate line of effort. The payoff is good. So keep up the great work. See you soon. And I owe you the Sunday's Foundations Q&A video. The summary of the swing trades, I think you'll find very interesting, especially Juan Carlos, because you're looking at swing trading a lot. There's some really good ideas in that one. So, all right, guys, take good care.
Thank you.
See you soon.
Bye.
Thanks.